I was at I had to do a mystery reader for my daughter's class the other day, and I read Curious George to him. And you know, Curious George and his friend with the yellow hat, and all the kids were excited to hear a book from Curious George. So they were all very intent as I was going through the reading, and they were very focused and excited because it was Curious George. And I kind of feel the same way about today's presentation. I figured fraud is one of those things that all of us, right? All of us, you say the word fraud, and it's kind of like you get intent, you get focused. It's kind of like, tell me some stories. We've all maybe you've dealt with fraud in some way, shape, or form. So I'm hoping with today's topic that people will be a little bit focused in, excited about what I have to hear. And what I'm going to go through, I'm going to talk about some statistics with fraud. I'm going to talk about some preventative measures, internal controls. And I think the one thing to keep in mind as I'm going through all of this is that with the implementations that you can do to prevent fraud, while it may be a little bit of time involvement, if you structure it right to do the prevention correctly, you can spend little time, you can be efficient with it, and it can save you a lot of headache down the road if fraud ever does occur within your organizations. Because I've been to a number of organizations where we've walked in the door, and the reason why we were called in was because they had some sort of fraud that occurred within the organization, and the headaches and the public announcement and what they have to deal with from a nonprofit organization. A lot of it could have been prevented by just implementing something just as little as a little bit of oversight or review of something, or just making sure that there was a little more detailed followed in certain procedures. So I'm hoping that what you can get out of this is something you can take with you back to your organization to help implement to prevent some sort of fraud, because I hope that if I'm coming in to work with you, it's because I'm consulting with you because the organization's got a lot of fundraising dollars in from their website, right? And you're looking to expand operations, and you're looking to make a bigger reach out to the nonprofit community. I'm there to consult with you on expansion. So I don't want to be walking into your nonprofit organization to help you deal with fraud, that's for sure. Just to get a show of hands and kind of understand the audience, how many individuals here are from nonprofit organizations? Okay, so we have quite a few here. How many of you are directly more in the finance? Let's say you're CFO or controller, a director of finance role, bookkeeper. How about the executive directors of nonprofits? How about those in marketing? Okay, so we have a pretty broad reach within the nonprofit sector as far as those that, the different levels and areas. And I think what you can take from this presentation, as I go through it, I'll try and mention certain areas where through the different levels, how it may impact you. But I think all of this information is relevant. Whether you're the executive director of a nonprofit, it's something you can take back to your finance department, or maybe it's one of these controls that you yourself can be involved in. If you're in the finance department, it could directly relate to you because of the procedures you're performing. If you're on the marketing side, the main reason why I'm here today and the topic of this presentation is protecting the gift. If you're helping with that development and trying to get the dollars into the nonprofit organization, how hard are you trying to bring in those dollars to that nonprofit organization? And then on the flip side of it, it's scary to think that as hard as you're working to get it in, just like that could be gone. So you want to make sure that if you're getting those dollars into your organization, that they're protected and they're going to where they need to go to, which is the mission of the nonprofit organization. Okay, I'm going to start off with a few statistics. Okay, the report to the nations, the Association of Certified Fraud Examiners, had a report out in 2012. They put one out every other year. 2014, they're going to come out with a new report. But I figured I'd start the presentation with some statistics, a little bit of, kind of scare the audience, kind of get you aware of what's going on out there in the world with fraud. Now, a lot of these statistics aren't specifically their reports aren't nonprofit specific, so they deal with all types of entities, organizations, nonprofit and for-profit. But in the report identified $3.5 trillion of fraud loss. Of those numbers, some key statistics behind it, estimated average loss due to fraud at approximately 5% of revenue. Okay, so if you're a $1 million organization, you're talking about $50,000 loss of revenue. It doesn't seem like a whole lot, but when it happens to you, it's $50,000 that you've worked hard to earn within that organization, and I got to tell you, it hits hard, and it can affect some of the programs that you offer. Median loss of $140,000 per fraud case. More than 1/5 of those were at least $1 million. And I think the last bullet point is interesting. I'll probably touch back on it a little bit later on in my presentation, and we'll kind of talk about why it may take so long for an organization to identify fraud. It says frauds reported lasted a median of 18 months before being detected. That's a long time, and it has to do with some of the controls and I think with some of the non-oversight you have. So we'll touch on that a little bit later on in the presentation. The smallest entities suffered the largest median losses, and nearly half of victims do not recover any losses they suffered due to fraud. I'm not claiming to be an insurance expert up here, but one of the things that you definitely should have within the organization is an employee dishonesty coverage. And depending upon, I know within the nonprofits we work with, it's something I would recommend to those that are, whether they're on the board of the organization, recommend to the organization, or if you're an ED, or if you're on the finance side, just to make sure that's something that the organization has. And depending upon the size of organization, it can depend upon the different levels and all that. So definitely speak with your insurance carrier. Make sure you have a employee dishonesty coverage. A couple more key statistics that I thought were pretty interesting that I pulled from this report. 87% of perpetrators have never been charged. 87%. I mean that's a pretty staggering number. And you won't believe how many nonprofit organizations I walk into where they are, in most cases, considering not even reporting the fraud that occurred. They would rather, take the issue of fraud and kind of sweep it under the rug, so to speak. Not let it get out into the public about what's going on within their organization. I think to me, I think it's one of the things that, just my personal belief that, I think that the perpetrator should be charged with the fraud cases, because, what you have is they think they can continually get away with it. They'll continually try and get away with the next position they're at. 6% had prior convictions, 6% charged but never convicted, and then 1% of other. So here's some other key statistics that I pulled out of here. More likely to be detected by a tip than by any other method. Look at the percentages. This is from that same report. Where is the fraud being identified? Where is it being detected? There's a little bit of shock that 43% is coming from a tip. I usually get that people are, they think it's some sort of audit process. Someone came in, someone audited, and someone found fraud. No, 43% is through a tip. Have any of you heard of red flag reporting? Any organization that uses red flag reporting? Okay. It's actually something, I've had a number of questions asked to me if is there a process you could have that does some sort of, third-party hotline, or if we wanted to have someone come in and talk to us about fraud prevention and how we, kind of keep the process outside of maybe going internally, having a representative internally dealing with the fraud, because there might be some internal conflicts in there. There's a company that does this red flag reporting, and you can just go online and go and type in red flag reporting up into your search browser, and it'll take you to their site. But what they do is, it's a pretty nominal fee. It's not that large of a cost to the organization, but they are a third-party hotline. They'll come in, they'll educate the organization about fraud, and then if there's any type of, they'll let the employees of the organization know who to contact if they ever feel that there is an issue within the organization, and they can contact that hotline. And then if the hotline, the person that receives the call, if they feel that there really is a situation that's warranted for further follow-up, they'll have a representative within the organization that is contacted regarding that issue to maybe further follow-up. Maybe it is more of a non-issue and they can discredit it, but it's a third-party hotline. So, red flag reporting is something we recommend to our clients, and I know that some nonprofits do use out there. Did I lose my mic? Oh, it says dead battery on it. If we get a new battery, maybe I can stand out here and speak a little more, and I can speak loud. get a little more interactive. So those were everyone hear me if I talk like this? Is that okay? All right. I'll try not to look back at the screen. I'll try and project my voice a little bit more. So those are some key statistics on fraud. The other thing I wanted to talk about was, what they call the ingredients for fraud. It's really it's the apple pie of ingredients, opportunity, and justification. If you're an organization that has ever dealt with fraud, you'll know that when you sit down and you start talking to an advisor that comes in to consult with you about the situation you've just arrived at, you'll find out that there's always some sort of justification, there's an opportunity, and there is an incentive with every fraud that occurs. So let me kind of walk through the scenario. So incentive, there's always going to be some sort of financial pressure, a change in life situation, something that, with most people, they're not just going to wake up in the morning and say, you know what, I'm going to steal from the organization today. There's some driving force. Maybe it's a medical condition that they have, some medical bills to pay, and it's, some sort of incentive to do it. There's got to be the opportunity, because if you're an organization that has strong internal controls and there's really no way that any type of monies can be misappropriated from the organization, then even though someone's going to have the incentive to do it, they're going to get caught, right? So they got to have some sort of opportunity to do that. There's got to be some sort of lack of control or oversight within the organization. I've listed a few different weaknesses here, and there's actually some other, a little bit later on in the presentation, I run through what I call my top 10 internal control implementation items. But with every opportunity here, you identify that there's got to be some duties performed, by one individual. There's multiple duties performed by one individual to save dollars. So I always talk, if we're talking about fundraising dollars coming in the door, what I always recommend to nonprofit organizations is that the person that is receiving the cash receipts from the outside and the person that is following up with that letter, that recognition letter, and the person that's going to be the person receiving that call from a donor, let's say they get that monthly mailing and they got a list of donors on there, and an individual calls to the organization and says, you know what, I contributed $100,000 the other day and I don't see my name listed on here. Why is that? That person that's receiving that phone call, try and segregate all of those duties. If one person is receiving the cash receipts, they're typing up that letter and sending out the letter to that donor, and they're also the ones receiving that phone call about why aren't they listed on the monthly newsletter. There's obviously some opportunity there now. You know what? No one's going to know if I got this. I could, if I cash that check to myself, if that person calls up, I can say, oh, you know what? We forgot you. We'll try and put you on next month's newsletter, or keep, pushing that off, or try and get them somehow into that newsletter without someone knowing. Use of signature stamp. I see this a lot of times with our nonprofit organizations. It's so much easier just to have a signature stamp. Us as accountants, every time we hear signature stamp, we get pretty scared. Oh, thank you.
Sorry about that.
We get pretty scared about the signature stamps that are out there with our clients, because it's just so easy for someone that has another an overlapping responsibility. Maybe they're cutting the checks within AP to all of a sudden get to that signature stamp and get a cash disbursement out. Use of corporate credit cards. How easy is it if you have access to a corporate credit card to go out and make a transaction that does not have a proper approval process on it? Reliance on overly dedicated, overly conscientious, and overly trusted employee. You get these employees that have been there for 15, 20 years, right? That you just believe in everything they do, and probably right so. I mean, they've probably been very dedicated to the organization. But what I've found is that if that person is very sincere about the mission of the organization, that they would want to have oversight, that they would want to have the proper controls in place to make sure that someone couldn't point the finger at them if something occurred. So it's something to think about. And then management override ability. Does management have the opportunity to, go into some of those internal controls and discredit some of those internal controls? So you have to understand if there's management override ability. Okay, so the third ingredient is justification. Ends justify the means, right? Everyone is doing it. I'm just borrowing it. Management doesn't care anyways. So there's got to be some sort of justification to the fraud. So you'll see that in pretty much every fraud is all of these three ingredients, is the justification, the opportunity, and the incentive. And what you have to try and do is you have to try and prevent one of those ingredients from occurring, right? And the one way is you just got to, for an organization, opportunity is the one where you just got to prevent the opportunities, because the other two ingredients of incentive and justification are sometimes out of the nonprofit's control, right? A person may have a medical bill to pay. They could very easily justify it because they just worked a long, hard weekend. But if you make sure that they don't have the opportunity there, it's going to prevent that fraud from occurring. Okay. Next area I want to get into is a self-assessment. And there's a handout I put on everyone's table. So I try to put 4 or 5 or 6 of them on everyone's table. It's front and back. And I think this is a great tool. This is something that our firm had put together, and it's a cheat sheet, and it's a kind of a check the box, I guess a checklist, so to speak, of things that you could implement within your organization. This checklist is actually a little bit outdated. Our firm is going through a rebranding right now, so I don't know if you may have heard of us as Howard Worshipel and Company. We're actually now rebranded to HW and Company, so we haven't changed all our materials yet. It just happened as of January 1, we made the push to rebrand, so this checklist still says Howard Worshipel and Company, but this is a checklist that we put together. I think it's very beneficial. And if you go down through there's actually 11 items on here, front and back. If you go down through all these within your organization and check those that do apply to your organization, I gotta tell you, it's almost like as long as you implement 1 or 2 of these things or have 1 or 2 of these things in your organizations, it's going to go a long way to preventing fraud. So it's not one of those things where you have to almost have everything on the list, but obviously everything on the list would be recommended to have. So let's go through these real quick, because I want you to kind of understand what they are. So number 1 is anti-fraud training provided to all employees of the organization. Do the employees understand what constitutes fraud? Do they understand the cost of potential fraud? Has a zero tolerance policy been implemented? So make sure within the organization that they've had some sort of training. I did mention that red flag to you. That's something they would come in and do, and they would do that training for you. Number 2, is an effective fraud reporting mechanism in place? Do they know who to communicate fraud to? Is there an anonymous reporting channel available to employees? Do the employees trust that they can report suspicious activity anonymously? So make sure that there is an effective reporting mechanism in place for them to report it. You don't want someone to shy away from reporting fraud because they don't want to go to their boss, so to speak, maybe the executive director of the organization or the director of finance, and they're scared to do that because their boss and they don't want to maybe turn someone in, but you got to make sure there's a mechanism in place. Number 3, to increase employees' perception of detection of the following proactive measures taken and publicized to the employees. Is possible fraudulent conduct aggressively sought out? And I like the second box there in number 3. It says, does the organization send the message that it actively seeks out fraudulent conduct through fraud assessment questioning by auditors and management? One of our audit procedures that we do is fraud assessment. So for those of you that are in nonprofit organizations, you have an audit done, you probably had a time when the auditors have come to you and asked you some fraud questions, whether or not you think fraud is prevalent within the organization or such that. And I've never heard of an organization that's appreciated being questioned by their auditors about fraud. So although we kind of recommend it and think it should be part of that culture of a nonprofit organization, we do get a lot of feedback saying they don't like people walking around their organization asking about fraud. But that is something, another thing that can help the organization. Surprise fraud audits performed. We don't get a whole lot of surprise fraud audits within our nonprofit clients. I think it's pretty much because of the size of those type of organizations. The size of organizations we deal with are revenues anywhere from $1 million to $20 million in revenue. You're not dealing with large publicly traded type companies here where you have a specific fraud audit department. But the one thing I do want to recommend is, and it kind of falls under number 4 as well, as there's a box to check there, is that if you're an organization and if you're having an audit done, you have to understand that as part of the audit process with internal control, we don't go and we don't test internal control. We go in and we get an understanding of internal control for those organization audits. So a lot of people think that we know what we have an audit. The auditors come in, they test internal control. We haven't gotten any recommendations. We go in and we understand internal control, and if we come across through our inquiry and observation that something should be addressed or improved, we'll recommend it, but we're not doing actual test of transactions. We're not testing cash disbursements for signature stamps and dual signatures. So one of the things that we'll recommend is that you can do a separate, it's called agreed upon procedures, a separate internal control testing that we'll do. So if we've got an organization that's got let's say they have a 12/31 year end, we'll come in and we'll do the audit in February, March, or April. We'll come out in June or July and we'll test a sample period that's from September of last year through May of this current year, and we'll test internal controls, cash receipts, disbursements, payroll, and that'll be something that will be at the direction of a lot of times the executive director or the finance committee of that nonprofit organization. So if someone there is some fraud occurring within the organization, well, you could say you don't do surprise fraud audits. What we can do with these internal control testing is that we could help identify something during one of those agreed upon procedures engagements. So feel free to to follow up with me if that's something your organization would like to do. Getting back to the list, number 4 is the management climate tone at the top, one of honesty and integrity. This is obviously very important. Our employees survey to determine the extent to which they believe management acts honestly, and has integrity. So tone, set the tone at the top. The top level executives, whether it's the director of finance or the executive director, has to make sure that tone is set. The very bottom of the page on number 4, that very bottom box, that's kind of where it talks about is there, the organization have established, implemented, and tested a process for oversight of fraud risk by the board of directors. That's kind of where that internal control testing, agreed upon procedures can be implemented. On the back of the page, there's just a few more items on here. Number 5 is the organization's internal controls based on a risk assessment model. So just to make sure, when the organization with the internal controls that you have, when we say that it's based on a risk assessment model, you should look at your organization and identify where are the most significant risks at. If the most significant risks are maybe payroll related, then you want to make sure that you have key controls there to implement against those risks. If it's maybe you receive a large amount of donations in the door, maybe that's where it is. The one thing that I guess with my presentation, it might start to get a little outdated in these future years. You hear Ron talk about all this, online donating. My seminar may have to switch to more of a cyber fraud than the fraud that occurs in the organizations outside of the internet. But if there is, if you do feel like that you're getting a lot of monies online, donations online, maybe you should think that you got key controls over those online donations. Number 6, are fraud risk assessments performed to proactively identify and mitigate the company's vulnerabilities to internal and external fraud. 7 and 8 has a few checklists. Let me get to our slide here. Oops. So 7 are anti-fraud controls in place and operating effectively, including the following: are the proper separation of duties. That's what I mentioned before when we were talking about segregating those duties on the fundraising when you get dollars in. Use of authorizations, physical safeguards. There's one at the very bottom here, the job rotation and mandatory vacation. This is something that I think every nonprofit organization should implement. If you go through and you do your risk-based assessment and you identify some key controls, you should have some sort of, with those individuals, have some sort of mandatory vacation. A lot of times, within the clients that we work with, you don't really have to force someone to take a vacation. I'm sure throughout the year they're going to be taking a certain amount of vacation. But just during those time periods, don't let their procedures or processes get delayed or backed up to the point where it's like, you take a week off, and then when you come back, you can pick up that process or that procedure. Try it while they're gone. Try and have someone else rotate that position, come into that position and perform that duty, because if they're trying to hide something or cover something up, that's something where someone else steps into that position that could help identify a potential fraud. And what you'll find is that the individuals then, when you start implementing that process, that person won't want to take vacation. And that gets back to that overly dedicated person. Sometimes they're overly dedicated because they know if they were to leave, a fraud would be identified. So definitely, mandatory vacations, job rotations are very important in a nonprofit organization. Does the hiring policy include the following? So there's a number of things here to address and look at as far as your hiring policy. Number 9, are employee support programs in place? 10 is an open door policy, freely to discuss items. Like I said, going down this list, you don't have to implement everything, but everything here is going to be something that's going to help prevent against fraud. And then our anonymous surveys conducted. So take this sheet back to your nonprofit organization and kind of go through the process with this. Or if you have what I think too, why this is important, if you have a finance committee, give this to the finance committee chair and have them discuss this at a finance committee meeting, or if it's a board, give it to a board chair member and have them go through it at a board meeting, or maybe it's a casual meeting that the board has to discuss fraud prevention. Okay. So time-wise here, I don't want to get us too much off track, but I do want to go through some internal controls, because I think these are important, some other things that you can help implement. So to help understand internal controls a little bit, we've gone to organizations and they've had a fraud occur, and we've said, what happened? Walk us through the process. And they've told us what happened. They said, but you know what? We had controls in place. Someone was doing the bank rec for our organization. That's why we felt like, we could use signature stamps and just have that one signature on our checks, because in the bank rec was, checks were coming back, whether they were electronically coming back to them that they could scan, or, in the olden days when you were getting them in an envelope, they were, we had that bank rec process, so people were kind of scanning through those checks. Well, the bank rec process started to get a little bit delayed, and they were a couple months behind, and they didn't find the fraud until, 3 or 4 months after it occurred, and the person had already taken a significant amount of monies. Understanding the internal controls in place is important, because having the bank rec prepared is a detective control. It's something where it's going to identify a fraud that occurred. A preventative control in place is something that would have prevented that fraud from ever occurring. So preventative would have meant you don't have signature stamps and you have dual signatures on your checks. That would be a preventative control. Detective is the bank rec process afterwards, identifying that the fraud has occurred. So it's the before and after process. So obviously preventative is more important than a detective. But what we do when we talk to our clients, a lot of times they'll say, well, you know what, we don't have the size or the complexity to implement the proper preventative controls. What can we do? And we'll say, you know what, you can still implement some detective controls to help identify the fraud. You just got to make sure that those controls are being followed and are timely being followed. Just a couple of comments. Internal controls should be specific to your organization, the size, easy to follow and become a part of the culture of the organization. Just to run through some quick internal control procedures to implement. Number 1, make mail opening a group activity or have it open in a public area like the reception area. This kind of gets back to even those donations that come in the door. Make sure that it's, it's someone that's completely outside of that cash reporting process within the organization. Have a receptionist do it, log the checks, and then they send it on to the finance department, and they send a different check to maybe the executive director to kind of see what kind of fundraising dollars they had coming in the door, cash receipts they had coming in the door, so you have kind of a dual reporting there. Just, don't be afraid to get more people involved in the cash receipts process. Internal controls, number 2, create a policy on number of check signers. We talked about that. Try and, organizations say, we can't have dual signatures on every check. There's just no way it's going to happen with the processes that, with the amount of people we have in an organization. Well, maybe set a certain threshold. Maybe it's checks over, $1,000 or $5,000 have a second signature. Those under have a single signature. And if you don't have someone within the nonprofit organization that can do the second signature, maybe it's the finance committee chair or someone on the board that gets assigned the responsibility of that second signature on amounts over $5,000. Okay? Use a payroll service and encourage all employees to have direct deposit. I think a lot of our clients, they have that now. They use an outside payroll service, a Paycor or a Paychex. There's a lot of them out there, an ADP that do a pretty good job. I have an individual I know that I refer to does a lot with Paycor. So if anyone has any, looking for a payroll service, let me know and I can direct you there. But that's, having that direct deposit, so those checks aren't going around the organization to hand them out. Have the bank statements and canceled checks sent directly to the ED, Director of Finance or Treasurer. And a lot of executive directors look at me and they go, I don't want to see the bank statement. I don't want to see a list of or an email of all of our electronic checks. The reason why we recommend it goes to someone high level, like maybe it's the executive director, is that and it doesn't really, you don't even have to go through and do a full scan of the bank statement. You can get the bank statement, open it up, walk into the person that's running the checks and the cash disbursements, and just ask them a question about one of the disbursements. Oh, what was this check for? You may not even really care what it's for, but it kind of just shows that you're kind of like, it's coming to you, and you have an oversight of that bank statement. It may take you 2 minutes to do it, but it's another oversight. Okay, number 5, check signers need to include, check signers need to double check that the vendor's name and address, the check ties back to the invoice. And the last point here is probably the most important. Be certain that it is an approved vendor. And make sure you have a process where you have an approved vendor list, and it only gets onto the approved vendor list by someone higher level in the organization, not necessarily the AP person. We had a fraud that occurred where an individual that was handling in the accounts payable department was able to create a phony vendor. There wasn't a proper review process to add a vendor into the system. They added a phony vendor in there, and what it did, it skirted the whole system of approval. They actually set up an LLC entity, which is very easy to do, set up a checking account, and they had checks going out to this person. They were actually sending dummy invoices into the organization for it, and they would put the check with the invoice. It was going through that proper process, and they were keeping them kind of small, so it wasn't like anything obnoxious. And they were going through, and they were being signed. I mean, there were some other problems there too, because they did have a signature stamp issue there. But just make sure with that there's a proper approved vendor list, because if it's not, if anyone can add to it, someone might be sending it out to a vendor that you think might be appropriate, and it's really not. Number 6, positive pay process. Does any nonprofit organization have a positive pay process that they use? No, I haven't seen it recently as much as I saw it maybe 5-10 years ago. There was a number of years ago, the FBI was looking into a ring that was here that was creating fraudulent checks, and they were doing it with a lot of nonprofit organizations, and so they were having, when they would get a scan of the checks that were coming through, and they were creating their own checks with somewhat similar sequencing of numbers on the checks, and the checks were getting paid by the bank, and they were coming to the nonprofit organization. If they were doing the bank rec timely, they were able to identify it and bring up the issue with the bank, and some of them got their money back. But the positive pay process, the bank started to implement, and what that does is, when you have your cash disbursement list, your list of checks, if you have it set up with your bank, you send that list to the bank, and it has the amount of the check and the check number. So when the bank gets that to process it, it matches it. And if there's a difference on the check that's coming through in the bank and what you sent them, they'll contact someone at your organization to ask them why it's different, why there is a discrepancy. Obviously, it's important for the banks too, because it prevents that fraud for them from occurring to start. And I don't think it's that significant of a cost. I don't have exact dollars in front of me what the deposit pay process is charged. I know the banks are a little bit different with the pricing, but I don't think it's relatively that expensive. Review W-2s for reasonableness. You'll see on the payroll side with W-2s, someone could be making, let's say $2,000 a month, okay, which is $24,000 a year. All of a sudden, there's an issue within your payroll fraud. Let's say this organization is doing their own payroll, and that amount goes to $2,500 per month. Well, from an internal review process, it may not be that large of a dollar, but when it gets to the W-2 at the end of the year, the $24,000 now turns into what, $36,000, right? So you got to make sure that, $30,000, but you got to make sure that what you're paying to your employees at the end of the year is reasonable, and that's one way you can check it. And have the person that does outside of the payroll, if you have your payroll done internally, have someone outside of that process handle the review of the W-2s. You know, with the person that's creating the fraud, also doing the review of the W-2s. Maybe it's the executive director, just kind of scan through it. Ensure every balance sheet account has been reconciled to detail. To me, this is very important from a fraud standpoint. If you do, your internal books on a monthly basis or a quarterly basis, depending upon the size of the organization, really make sure that every balance sheet account has support and detail behind it. I can't tell you how many frauds we've gone into where the person was committing the fraud and they had an account to kind of dump their monies into, the $500 or $1,000 they were taking out each month, and they were put into an account that never got reconciled. Probably 99% of the time that occurs. Okay, and that a lot of times it happens with some sort of balance sheet account that they end up clearing out to some expense account at some point in time during the year. But make sure every balance sheet account has been reconciled. And on the flip side of that, if you reconcile every balance sheet account and then you have a budget to actual on your revenue and expense, then you can kind of monitor your revenue expense within budget to make sure things aren't getting out of whack with that process. And that was my number 9 is create budgets and compare budget to actual. And then have the bank rec prepared timely. So I know I'm getting a little bit over my time, but just real quick, just to make a comment about a couple financial best practices to prevent fraud. I won't go into the detail slides, but under financial best practices, annual budgets, make sure the organization has an annual budget. I think most of our clients do, but not only have an annual budget, but make sure that there is a process that is followed with that. Make sure there's proper board approval of the budget. If someone is trying to, steal money from the organization and your preventative control is that you have actual to budget on your income statement, and the person that's making that budget is the person that's committing the fraud, well, that control doesn't really help, right? If they're increasing the budget for the amount of fraud they're taking on the organization. So get, board approval, have a number of individuals throughout the organization involved in that budget process, so it's not just one person. And then, what I always say with the budget too is, and this maybe isn't more so on the fraud, but just kind of from just completing the budget process, is make sure that the organization has some sort of identified reserve. I know nonprofit organizations aren't necessarily out to make a significant profit, but you're still running a business and you still need to run your organization to have longevity and be a viable entity. So make sure there's some sort of reserve. Maybe it's a 5% of the organization's overall revenue or expense that is held as reserve. Okay, internal financial reporting. Just make sure, like I mentioned before, that you have monthly financial reporting. Policies and procedures. Make sure that the organization has significant policies and procedures in place. I could actually go through a whole other presentation on the policies and procedures, but I know that there's a lot of them that are identified on your 990. So if you're preparing your 990 and you're checking that box no to any of those policies and procedures listed there, then that's something obviously I think you should implement within the organization. And then compliance reporting, just to make sure that at the end of the year there is some sort of compliance reporting. If you're an organization that has no requirement for an audit because the grant monies aren't big enough to have an audit and you don't have a review done, there is still a compilation as the next level to that. Just making sure you have some kind of year-end compliance requirement there, whether it is an audit, review, or compilation. I think from a board level, I think that's something that they would recommend as well.